Welcome to Keep What You Earn, your judgment and jargon-free zone for entrepreneurs of all levels. Get ready to learn how to scale your business, save money in taxes, and create a business that grows your wealth. If it feels like the financial side of business is like eating your vegetables, well, then think of this podcast as the ranch dressing to make the process a little more enjoyable. My name is Shannon Weinstein. I'm a CPA and business owner on a mission to simplify money and empower others through knowledge. I hope this episode inspires you to take action, but remember that the information we share is for educational purposes only and is not individual tax advice. Now that we got that out of the way, let's start the show. When I hear business owners struggling with profitability or cash flow, usually what they do is they come to me and tell me that they're worried about their profit. They want to manage their costs better. They need to better manage their cash flow, right? These are all things that they've probably been told they need to work on. But what I actually look at first is I go back to their core offer and I go back to their pricing because even though I tell you all the time to stay away from the revenue line item as the end all be all source of solving all problems, I actually want to redirect your attention back to that for a second and make you realize that a lot of things stem from that line item. So, when we talk about pricing, this is how to know if pricing is actually your problem. So, you have to work a little bit backwards. So, when you look at your business, specifically when you look at your P&L, your profit and loss statement, what you need to do is understand how these numbers relate to one another to figure out which one is the lever worth pulling. So when we look at profitability, right, we look at what is called margin. And margin essentially means as a percentage of sales. So gross margin is your gross profit as a percentage of sales. Your net margin is your net profit as a percentage of sales. So when we look at your gross and net margin, we want to use that as a guideline to know how profitable you are. Your gross margin, by the way, I've discussed this in prior episodes, but just at its core, what gross margin means is how much of your price you retain to be able to pay for your operating costs. So if you sell something for $100, your gross margin is going to be how many dollars of that 100 are now reserved to help you run your business that did not go to paying for the creation and delivery of that product. So if you have a product-based business, then this is going to be the materials, the wholesale cost, the shipping, all of that, plus the direct labor that you're using to produce or to deliver that product or service. So if you have a service-based business, like a law firm, you have the cost of your lawyers is basically goes into the gross margin. That's basically your cost of service. So understanding your gross margin is key. So understanding how profitable is your actual core offer. And, that is really where everything starts. If your core offer is not profitable or your core offer is not profitable enough to then cover the expenses associated with operating your business. So let's use my example again. You sell something for $100. It costs you $40 to make, right? So your cost is 40, you're selling it for 100. Okay, cool. I'm selling it for a $60 markup. So, okay, at the surface that sounds profitable, right? But if you have $60 after each widget gets sold, you have $60 left to spend on operating your company, paying the rent, keeping the lights on, paying your staff, paying yourself, your salary, and all the software subscriptions, all those extra costs that you have. If all of that is more than $60 per item that you sell, then we have a problem because now you're not making enough profit from your widget. You're not making enough gross margin to be able to cover the cost that it takes to run your business. So there's a couple of things that have to be done. One is you have to look at your gross margin. You have to look at your formula here. Look at your costs for your product. In my case, it's a $100 price point and a $40 cost. Can that cost be lower? Can you find a way to negotiate or lower that cost? If you cannot, which most people have very little flexibility here, very little flexibility on your actual cost here. So what you have to look at is the other variable here is price. So if you've gone through this exercise and you've realized that I could squeeze more out of that gross margin, I actually need to have more like $75 for every item to be able to cover all my operating expenses. You also can reduce your operating expenses. These are all things you can do as strategies for your company. If you're looking at your P&L and L and you're like, damn, I'm spending a lot of money on operations. Well, you could start there, right? And cutting costs there. But if you decide that, nope, those are inflexible and I need more money out of my gross margin to be able to pay for those things, okay, then we're at pricing at this point. Because if we've already explored the option of reducing costs and we can't, we go to pricing. And we go to, are you priced properly for the market? Are you priced properly with the right markup? And in general, are you pricing for your customer, right? And that's kind of along with the market. Hey, Shannon here, and I have a quick favor to ask. If you're enjoying this podcast and enjoying this episode, please leave us a review on your podcast platform, whether that's Apple, Spotify, Amazon, any of them, and let us know if you're enjoying the show. One of your biggest takeaways, we would really, really appreciate it. Okay, back to the show. But by market, I mean your competitors. So are you priced similar to competitors in the market? Are you priced in a way that your ideal customer can participate, right? It's accessible to them. And are you also pricing with your profit in mind? So you have to keep in mind these things and you have to make sure that as you're pricing your product or offer, that you factor all of this in. Now, when we look at your pricing, we know you have a pricing problem if your gross margin's not on point and you know that you could be making more money from your product. And you have to ask yourself and be honest. Why haven't you raised your prices? When's the last time you raised your prices? You have to also be realistic and understand that by raising your prices, you're not going to lose all your customers, that there are some people who will just be loyal to you, but also that, your price is a reflection of value. So sometimes you have to raise your price. It just means that you also have to articulate your value a bit better. Elevate how you come across, elevate your brand, elevate your stature in the market. And that's hard to do. It's easier to price compete. So a lot of people have that race to the bottom, and that doesn't serve anybody. So when we look at your pricing, we want to understand, are you priced properly? And here's the kicker. If you have multiple offers, are they priced properly in relation to one another? So if you want to encourage your buyers to participate a certain way in your business and buy the larger sized offer, are you priced in a way where it makes sense for them to do that? That it's a good deal, that it's a good value? If you want somebody to buy 5 of something instead of 1, do you have a bundles price? If you want someone to become a recurring customer, are you offering them subscription incentives to make it easier and make it more affordable or make it more accessible to them to purchase multiple months at a time? These are things to consider, or offering additional benefits, right? So, for example, we do this with power sessions, right? We have one single power session. And if you want to buy 4 power sessions over the course of 12 months or a year, we have 4 quarterly power sessions for the price of 3. We want to incentivize this commitment because we want to incentivize someone to enroll with us for a year of quarterly sessions recurring instead of the spot, hey, Shannon, I want to do a power session with you. And then they go dark for 3 months or 4 months, and then they pop up again and say, hey, I want to do another power session with you. These are then pre-scheduled, everyone's accountable, and it's a full year of support where I know I'm going to be coming back into this person's business and I will keep a pulse on that because I know I'm going to be revisiting this with them. So it's a heavy value for the client, but also a great incentive from the standpoint of the price point. So it's basically a buy 3, get 1 free. Do you have something like that you can do? Because a lot of times what ends up happening is you end up pricing yourself in a way where you're not actually encouraging your customer to buy what you want them to buy. The fundamental question you have to ask yourself when you're pricing is, what do I want them to buy? And am I making that the most enticing option? Because if you're not, we need to revisit the whole thing. But when you identify that pricing is the thing that has to change, or one of the things that has to change, one of my favorite things to do is just allow yourself to test drive it and to understand the nuances of, okay, if I increase my price, what happens? Am I noticing any trends or any differences? Am I going to improve my margins? Maybe. But increasing your price also has to work in tandem with essentially cutting costs, reducing overhead, finding efficient means to fulfill on these sales that you're making, and to overall increase both margins, your gross margin and your net margin. If you can do that, then you're in great shape. But I also would caution you that just because you are profitable doesn't mean your pricing's perfect. It doesn't mean your pricing's perfect. You could be under this false sense of profitability. You could be seeing profit and you think everything's great. But if your profit margin, let's say your gross margin is, say, 70%, what if it could be 85 and you're leaking costs somewhere? And same thing with your net margin. What if you could be doubling your profitability, but you don't know it? So I would also caution you with this, that even if you are not perceivably struggling with profitability, it is a great idea to just approach it with the curiosity of, hey, could we do better? Could we do better? What would it take? What would have to change? What would have to happen for us to increase our margins by 15%, 5%, whatever it is? What would have to happen? And allow yourself to paint that picture. Allow yourself to say, well, we would have to increase the price to this, we'd have to lower our costs to this, and we would have to give up X, Y, and Z subscriptions. And then be brutally honest with yourself. Are those things you're willing to do? Are those things you're willing to try? Then wouldn't it be unreasonable not to expect that type of outcome if you were willing to do all of those things consistently? For example, if you decided to cut your calorie intake by 2 or 300 calories a day, you decided to give up sugar, and you decided to go to the gym an extra day a week, what do you think would happen? What do you think would happen? You would probably get fitter faster, build lean muscle, do all those things, and you would be completely, you know, within expectation of those results. So your numbers work very similarly to that. And you should really consider, when you look at your pricing, when you look at your profitability, understanding what are the key drivers of this and what can we change, what can we do differently to make it a little bit better day by day. When it comes to scaling your business, your core offer is the foundation of your success. If you're finding that your margins aren't exactly supporting the cost of running your business, well, it's worth taking a closer look at your pricing strategy and your direct costs to hack it and figure out what your constraint is. Sometimes all it takes is small adjustments, like fine-tuning your pricing or streamlining your expenses. These can make a huge difference. Join me for a power session and let's dive deeper into the profitability of your core offer. All the information is in the show notes below.